Welcome to CFA's training session on the annual financial statements and unclaimed gas tax. The topics I will be going over are financial services branch role, unclaimed gas tax, UGT distribution, UGT guarantees, Food and Agricultural Code Section 224.5, maintenance of effort, annual financial statements, common errors, and contact information. Financial Services Branch responsibilities. FSB responsibilities are to obtain and audit the annual financial statements from the counties, calculate the net county expenditure data and the distribution of the apportionment pursuant to Food and Agricultural Code Section 224D and 224G, inform the CACASA Finance Committee members or CDFA staff if the criteria for FAC 224.5 is not met by each county. Provide the California Department of Pesticide Regulation the pesticide use enforcement information from the AFS. Maintain and update the AFS Procedures Manual. Unclaimed gas tax. Excise taxes collected on motor vehicle fuels are deposited in the motor vehicle fuel account. Section 8352.5 of the Revenue and Taxation Code requires fuel taxes attributable to unclaimed agricultural gasoline tax used for off-highway be transferred from the motor vehicle fuel account to CDFA. The estimated transfer amount of unclaimed gas tax attributable to agricultural off-highway use is calculated by the CDFA Budget Office on a biannual basis. The information is prepared in conjunction with the California Department of Transportation biannual report prepared for the legislature. This report can be obtained by going to the Department of Transportation website. So if you go to the Department website link, you'll see that 2022 is the latest report, and if you click on the report and scroll down to the executive summary, you'll see that for last year, fiscal year 23-24, the transfer is $85,215,971. We are still waiting on the new report for the transfer amount for this fiscal year 24-25. The Food and Agricultural Code Section 224 identifies how the funds are to be expended. Unclaimed gas tax fund allocations distribution. This is the gas tax transfer last year for fiscal year 23-24. The annual allocation funds various activities. FAC Section 224A appropriates $9 million annually for payment to the counties for pesticide use enforcement activities, supervised by California Department of Pesticide Regulation. FAC Section 224B appropriates $250,000 annually for state and county liaison activities. FAC Section 224C appropriates $1.5 million annually for divisional and departmental overhead charges. FAC Section 224D appropriates 7% of the amount in excess of the total transferred from the motor vehicle fuel account in the 2006 to 2007 fiscal year for distribution to the counties to offset expenses associated with county administrative activities. FAC Section 224E appropriates $3 million annually for pest detection and trapping programs. FAC Section 224F appropriates $3 million annually for emergency projects. FAC Section 224G appropriates the total amount transferred, less the amounts provided for in Subdivision A to F, and are based on county net expenditures for carrying out agricultural activities. Highlighted are the amounts that will change yearly depending on the gas tax transfer. This is an overview of how the final figures go into the distribution calculations for 224G and 224D. We start by calculating the 224G amount to be distributed to the counties. For example, last fiscal year 23-24, of the FAC Section 224G appropriated amount $64,829,882. The CASA agreement plan to withhold and the commissioner's salary is subtracted to calculate the 224G amount to be distributed to the counties. The 224G amount to be distributed to the counties for fiscal year 23-24 was $53,167,082. We then calculate the net county expenditure for each county. The subtotal CDFA Agricultural Code programs on the AFS is used for the calculation for the net county expenditures. In this example, we take the subtotal CDFA Agricultural Code programs expenditures $833,237 subtracted by the revenue $644,765 less the gas tax $176,438, which equals the net county expenditure of $364,910. We then calculate a percentage by taking the 224G amount to be distributed, $53,167,082, divided by the sum of the net county expenditure of all counties, less the ag expenses from guarantees. The percentage is applied by multiplying it by the net county expenditure for each county to come up with the distribution calculation amount. In our example, the percentage is multiplied by the net county expenditure, $364,910, and the distribution calculation amount is $217,632.32. To calculate the distribution for 224D, we calculate the allocation percentage per county using the distribution calculation amount divided by the total 224G amount to be distributed. We then use the allocation percentage by multiplying it by the total 224D appropriated amount, $3,636,089. In our example, the distribution for 224D is $14,871.60. Unclaimed gas tax guarantees. FAC Section 224G and Revenue and Taxation Code Section 8352.5 guarantees an amount to be paid to the counties. CDFA calculates the guarantee amount for each county. Generally, the guarantee amount is less than the distribution calculation. However, when the UGT distribution is less, the county will receive the guarantee. For fiscal year 23-24, Alpine, Riverside, and San Francisco counties receive the guarantee amount because the distribution calculation was less. Food and Agricultural Code Section 224.5. Counties are required to meet the following eligibility criteria per FAC 224.5. 1. Employ or contract a licensed agricultural commissioner. 2. Submit annual financial report to the department. 3. Maintain county general fund support for agricultural commissioner services equal to the average amount expended for the 5 preceding fiscal years. Maintenance of effort. California Agriculture Commissioners and Sailors Association leadership and CDFA representatives developed a methodology for calculating the average net expenditures for agriculture programs during the 5 preceding fiscal years, referred to as the Maintenance of Effort or MOE. The total agriculture code programs on the AFS is used for the calculation on the MOE worksheet. Note, other program activities are not used in the MOE calculation because they are not governed by the Food and Agricultural Code. In this example, upon completion of the AFS, the total Agricultural Code Programs expenditures $1,133,304.84 can be entered on the MOE worksheet, and the revenue $928,616. The net county expenditure will be calculated by subtracting the total revenues from the total expenditures. If the current year net county expenditure is greater than the 5-year average, then the county has met their MOE. If it's not met, it will calculate the amount below average here. Annual financial statements. The AFS and the Reportable Expenditures and Receipts Report are mandatory reports that are submitted to CDFA each year by October 31st. The AFS is a recap of the total expenditures and the total revenues and reimbursements received for the programs under the responsibility of the County Agricultural Commissioners. The purpose of the Reportable Expenditures and Receipts Report is to reconcile expenditures, revenues, and reimbursements reported on the AFS to the official CAC Annual Expenditure Report. Annual Financial Statement Procedures Manual. This manual is maintained by CDFA's Financial Services Branch. The manual provides guidelines for the uniform reporting of agricultural expenditures, revenue, and reimbursements. The detailed procedures are not intended to prescribe the method in which counties gather and compile the information, but rather to provide guidance to assist counties with the preparation of the statements. The AFS Procedures Manual is available on the CDFA County Monthly Reporting System. Annual Financial Statement Timeline. June 30 is the fiscal year end for county reporting. Mid-August is when FSB emails each CAC with a blank AFS and reportable expenditure and receipts form, as well as the county's MOE calculation spreadsheet. October 31st is when the AFS forms are due to FSB. November to December is when FSB audits each AFS for accuracy and completeness. The counties will be contacted as necessary. The MOE is calculated and communicated to each county. December is when payment distribution calculations are completed by FSB. Letters stating MOE eligibility are emailed to the county CAO and CAC with the distribution amounts. January 31st is when justification letters are due to CDFA for counties that did not meet their MOE. February is when CACASA meets to accept or deny justification letters. FSB will email the county CAO with the status. April is when FSB sends payment requests to the State Controller's Office for UGT payments. Some common errors when FSB audits the AFS is the expenditures, revenue, and reimbursement totals does not match on the AFS and the reportable expenditure and receipts report. The gas tax 224D, 224G, or 224A on the AFS does not match CDFA records, and no explanations were provided for variances greater than 30% from previous year. Contact information: you can contact me, Zoa Vang, at 916-823-7310 or by email at zoa.vang@cdfa.ca.gov. Jody Lusby is our director. Her number is 916-654-1020 or by email jody.lusby@cdfa.ca.gov. If you have any questions, there will be a Q&A session on October 9th, 2024, where you can bring your questions, or you can give me a call or send me an email at zoa.vang.cdfa.ca.gov. Thank you.